All right. Hello, my fellow investors. It's the Intelligent Investor here. In today's video, we're going to be talking about what's going on with the whole SPAC situation. But before we start the video, guys, use the link in the description down below to sign up with Acorns. Now, Acorns is a really great platform that you guys can use to actually invest for your future. And if you guys use the link in the description down below, this week, I'm going to be doing a 1 year membership giveaway. So we'll be doing that drawing on that weekend. Whoever wins will be winning 1 year free membership to Acorns. So stay tuned for that. Also, once we hit 6,000 subscribers, also once we hit 7,000, 8,000, so on and so forth, every time we hit the 1,000 mark, we'll be doing an Apple stock giveaway. So stay tuned, stay subscribed, and you'll be notified when that happens. So let's start with the video. What are we looking at here? Now, I'm going to try to break this down to make it simple because I know a lot of my followers don't have a lot of experience in the market. So I don't really want to make it too complicated or they won't understand. So you have to understand that the SPACs are, blank check companies. It's here with ACIC, APXT, EXPC, CCIV. Those are the ones that I have at the moment. ACIC is going to merge with Atlas, APXT with AvePoint, EXPC with Blade, CCIV with Lucid Motors. Now, we know that's going to happen. They've already been confirmed, but why are the stocks coming down? Now, the SEC is actually investigating a lot of these SPAC situations that are happening, and that's going to delay these mergers. That's why these companies are coming down. But how do SPACs work? So, to quickly explain, not make it too complicated, SPACs are like, so they kind of open it up and they raise money. And the way they raise money mainly is from hedge funds or big investors, right? So they buy warrants, which they buy them at a cheap price. Let's say, for example, they buy them at $8. So they raise all that money and then they release a SPAC and then it comes out at $10. So then we start buying into it, right? And we raise the price up depending on the demand, all that stuff. And yeah, so what's been happening is that because they've been fluctuating too much, a lot of these companies and people were using SPACs as the new system of trading, which Kathy Wood was doing, and that kind of created a whole movement, which kind of ruined a lot of things. Okay. And what happened is that a lot of SPACs were just too overhyped. So they kind of kept blowing up. As you see, CCIV was one of them that jumped up to $60. And I mean, it was like I always said in these videos, they were way overvalued. And I didn't jump into it back till it was about $28. So I jumped into CCIV at 28. So I mean, I'm pretty much down what? A few $10 or something like that, not much. But I'm looking long term, by the way. So kind of jumping back into this because they're overvalued. The big corporations or the hedge funds were selling those warrants off and they were making money, which brought the stock down. Now, because they bought it like around $8 or stuff like that, they had premiums. So if we sold off of it, it would only drop to $10 and then they can still sell and they can collect that premium. So hedge funds had little to no risk on, on these SPACs. So that's the thing they're kind of working with. They're kind of trying to slow that process down because I mean, people have been going too insane with SPACs and people, I mean, everybody on YouTube that I've been seeing has said, oh, hey, look, I have my SPAC folder. We're going to do swing trades, blah, blah, blah. I mean, that wasn't a system. That's not a system. SPACs are not a system. If you actually look back a few years, SPACs didn't really fluctuate as much. So when we said like, let's say CCIV would have came back out in 2 years ago before the retail investor, we would say, hey, CCIV is coming out. All right, stock is at $10. It's going to merge. It jumps up to like 13. It stabilizes at 13. It merges. It goes, to like 15 and it stays around that price. Then numbers come out and all that stuff, and it slowly starts going up. So that was kind of the process. But now we saw that, CCIV had rumors and boom, shot up all the way to $60, and it was just a bunch of nonsense. You get me? And a lot of people lost a lot of money. So the SEC has to actually look out for that kind of stuff. So, this is the thing that's going to kind of slow down the SPACs a bit. It's going to take a while for them to actually merge now because, again, everybody's going through a harder inspection. Are these companies going to merge? Yes, they are. They're going to merge. I mean, they're going to pretty much go up in the future. We don't know when. I mean, before merge date, I think they're going to be a good little, there's going to be a good little spike. But I mean, APXT was supposed to merge by the end of this month. It's probably going to be moved up within the next month or so. ACIC was supposed to merge in June. It probably will be still. We don't know, but it might be pushed a little more. Same thing with EXPC and CCIV. They were going to merge in June, July. They might be pushed to the fall. So we have to wait and see. But my most exciting one is CCIV, just because they will be releasing their vehicle later on this fall. So this is what we want to look for. We want to see where this goes. But as you see, it's dropping under 20. Is it a buy? I mean, for me, it's still a buy. I see the value of this company when it merges at $40. So that's kind of my look for that. But yeah, I mean, it can go anywhere. I mean, CCIV can drop back down to 10. If it drops that back down to 10, I'm going to load up a bit, because I'm looking for, like I said, the long term. Any of these companies that I buy, I have a lot of hope, and I've done an extensive research on these companies that I feel that are going to be good and like innovative for the future. So, I mean, like I said, I only buy into stocks that I know are gonna be good. You get me? I don't jump into stocks I just don't know. People tell me, hey, why don't you jump into this stock? Why don't you jump into this stock? I mean, I've done research on that and I just don't feel like it has much push. And a lot of people were telling me to jump into AI3 or something like that. I mean, it was at 120, it dropped down to 100. It's close to what, $60 right now. So it's dropped more than 100%. So, I mean, I don't take those risks, guys. I mean, I jump into companies that I know are good, that I know they're going to be good in the future, and that are stable. So yeah, guys. I mean, like I said, it's a crazy thing that's happening with SPACs. I mean, you have to understand that we're popping our bubble. We were in a huge bubble this past year, and a lot of new investors came in this past year. Understand, I've been in the market for 12 years, so I've seen so many different things. And this past year has been a completely crazy, new, insane thing, especially with retail investors. And I mean, it's kind of sad because I've seen a lot of people out there that have, like I said, they have huge portfolios. They have over $100,000 worth of portfolios. And I mean, their portfolios are tanking and they're down, over 40, 50,000 because they just jumped into growth stocks, into SPACs. Not even good growth stocks. For me, good growth stocks are like Apple and Microsoft and Tesla, but no, they bought into like Neo, Xpeng, CCIV, all these other stocks that I just don't it's just I just feel bad. I don't think I don't even feel I don't know. I just feel horrible for them. But, like I said, that's why you have to be an intelligent investor. We have to know how to approach things and approach things for the long term, not for the short term, because that mentality eventually will break you. But this is just a good little thing that I kind of wanted to explain, an easy way to explain to you guys, something where you guys can actually like learn. If you guys want to look more into it, I mean, there's a good video of in what's his name, Patrick Boyle. He has a good little thing on talking about the SPAC thing. But I mean, this is kind of what I wanted to mention. If you guys didn't know what was kind of going on, I mean, people were saying, hey, these stocks can't drop under 10. They can if those large investors sell the warrants. So I'll slowly try to teach you what it all means, because there's different things of like, what SPACs are, what IPOs are, what a common stock is, what a preferred stock is. These are all things that play a huge part, because when you have like a preferred stock, then a common stock, they're two completely different things. Common stock does give you voting rights, but preferred stock is like the main owner of the company. Common stock is like a whatever zoner type thing. And I'll try to do videos so I can try to explain all that kind of stuff. So you guys can kind of learn more and more and understand these things, because the more you know, the more you learn, the more you'll be successful in the market. So that's all I want to talk about, guys, in this video. If you guys did like the video, please like, share, and subscribe. If you have any questions, put them down in the comments down below. Join our Discord to actually ask questions there. It's free, no charge. Just click the link in the description down below. Also, guys, if you want to ask me a one-on-one question and want me to help you guys out a bit, you can follow me on my Instagram and that link down below. So that's all I want to talk about. Thank you guys for watching, and I will see you guys next time.